Okay, so when you think about planning a trip, maybe something fun for the whole family,
Yeah,
or somewhere you can see, you know, amazing animals, maybe learn something too.
yeah. Marine parks, ocean parks often come to mind, right?
Exactly. For a lot of people, that's the go-to.
And they're kind of a unique mix, aren't they? It's entertainment, but also education, and more, there's this focus on conservation too.
Right. The environment. It taps into that, well, that fascination we have with the ocean.
Definitely.
And it seems like that whole blend is actually fueling some pretty serious growth. We've been looking at this forecast report.
Yeah, a really detailed one.
That gives us a good look at the global market for these marine and ocean parks.
So our mission here really is to unpack what this source is telling us. We want to look at the key numbers, see the trends.
And the drivers behind it all.
Exactly. What's making it grow? The report really stresses how marine tourism is multifaceted. It's fun, yes, but also learning, and this emerging element of caring about the ocean.
Okay, so let's start broad then. The global view. What's the report saying about the market size overall and where it's headed?
The scale is pretty impressive,
Yeah.
and it's definitely on an upward trend. The source pegs the global value at $2,755 million back in 2021.
Okay, 2.7 billion roughly.
Right. And it grew to $3,400 million by 2025, and the projection, it's looking like $5,178.5 million by 2033.
Wow, okay. That's a pretty steady climb. What kind of average annual growth does that work out to?
So the report calculates the CAGR, the compound annual growth rate, at 5.4% over that whole period.
5.4% globally. That sounds pretty healthy for a market like this.
It is, yeah. Solid expansion.
So why? What reasons does the source give for this growth? Why are these parks getting more popular?
It points to a few things coming together. First, just more public interest in marine life, in biodiversity. People are more curious.
Okay.
Second, rising disposable incomes globally. More people can afford this kind of leisure.
Makes sense.
And third, a big one is the rise of family-focused tourism. Families wanting shared experiences that are, fun, but maybe have a bit more substance.
Right. Curiosity, money, and family time. That clicks. Okay, so with that global picture, where's the action happening? Let's zoom in a bit. North America.
North America is, a huge piece of the puzzle, the figures there. $1,114.1 million in 21.
Okay.
Growing to $1,349.5 million in 25, and they project $1,969.9 million by 2033.
Nearly $2 billion by 2033. And the growth rate there, how does it stack up globally?
It's a little bit slower than the global average. The CAGR for North America comes in at 4.8%.
Interesting. So big market value, but maybe not the fastest engine of growth. Let's break that down. The U.S. must be the giant.
Oh, yeah, absolutely dominates the region. The report shows it as the biggest revenue contributor. Started at $761.8 million in 21, hits $909.3 million in 25, and projected $1,286 million by 33. But like you said, the growth rate, the TAGR, is a bit slower at 4.4%.
So massive scale, but more moderate growth. What's driving the U.S. market then, according to the source?
Well, it mentions the established players. Iconing places like SeaWorld are still a big factor. But also, newer parks are popping up, and they're focusing more on education and interactive stuff.
Yeah, tying back to that biodiversity interest, maybe.
Could be, yeah. Seems logical.
What about Canada? The numbers looked a bit stronger there.
They do, yeah. Canada was $238.4 million back in 21, and it's expected to hit $449.1 million by 2033. That's a 5.4% CAGR.
Right on the global average then.
Exactly. Marineland gets a mention there as an example.
And Mexico. The source called it an emerging hotspot. What's the story?
Yeah, the growth rate there really stands out. It was $113.9 million in 21, projected to more than double to $234.8 million by 2033.
Wow.
That's a strong 6.2% CAGR. Places like Xcaret are part of that boom, the report says.
Okay, so North America. It's like the U.S. provides the massive base, but the real growth rate excitement is coming from Mexico and, to some extent, Canada.
That's a good summary. A mix of maturity and faster emergence.
All right, let's hop across the pond. Europe. What's the report paint there?
Europe's another really significant market. The numbers, $855.7 million in 2021, for $1,043.5 million in 2025, and projected to hit $1,551.5 million by 2033.
And its growth rate, the CAGR.
Europe's sitting at 5.1%, so very close to that global average again.
Okay, and within Europe, who's leading? Any interesting country trends the report picked up on?
Well, the UK actually shows really strong growth, a 6.2% CAGR.
Higher than the U.S. or Canada?
Yeah. It's forecast to go from $155.7 million up to $319.6 million by 2033. Sea lice centers get mentioned.
Okay.
Germany's another big one.
This audio was created with podcastle.ai.
Sea lice centers get mentioned.
Okay.
Germany's another big one, $144.6 million going to $280.8 million. Interestingly, the report links that growth partly to demand for ecotourism.
Ah, that ecotourism angle again. Interesting, it's specifically mentioned for Germany. What about places like France or Italy?
France looks solid, 5.3% CAGR going from $113 million to about $209 million. Italy's growth is noted as slower but stable, $71 million up to around $115 million.
Any other European spots the source mentioned?
Let's see. Russia shows moderate growth, $64 million to $108 million roughly. Spain's expected to see a pretty good jump, $77 million to $116 million.
Okay.
Luxembourg is flagged as more of a niche market, slower growth, 2.7% CAGR, pretty small numbers. And then there's a rest of Europe category.
Right.
That includes places like the Netherlands, Portugal. And that group collectively shows significant growth, $172 million to $318 million, with a 5.1% CAGR, matching the regional average.
So Europe's quite a mixed bag then. You've got strong leaders like the UK, big stable markets like Germany and France, and then some smaller or slower areas, complex but growing overall.
Yeah, definitely a diverse picture regionally.
Okay, Asia Pacific. This region often posts some huge growth numbers in, well, lots of markets. Is that happening with marine parks too, according to this report?
Oh, absolutely. The momentum there is described as remarkable. It started at $596.5 million in 2021.
Right.
Hit $768.7 million in 2025, and it's projected to surge past $1.2 billion.
Yeah.
$1,276.5 million by 2033.
Wow, that's a massive jump. What's the overall CGR for Asia Pacific then?
This is where we see the highest regional CGR in the report, 6.5%.
6.5%. Okay, so where's that growth really coming from within the region?
Well, China is the giant in terms of volume.
Yeah.
It went from $221.5 million in 21 and is projected to hit $517.5 million by 2033.
Huge.
Yeah. And the report ties that to booming domestic tourism and big investments in aquatic parks specifically. But the highest growth rate, that's India.
India, what's the number?
An impressive 8.4% CAGR. It's forecast to go from $59.2 million to $156.1 million.
8.4%, that is flying. What's the reason given for India's surge?
The source links it to growing urban interest. As cities expand, people are looking for these kinds of leisure activities more.
Urbanization driving demand. Okay, what about other players like Japan or Australia?
Japan's seen as a more mature market. Steady growth, 4.9% CAGR. Going from $122 million to about $215 million. South Korea is growing strongly too, $82 million to $173 million. And Australia, $33 million to $63 million over the period.
And Southeast Asia, places like Thailand, Indonesia.
They're grouped together in the report. That segment shows growth, $29.5 million to $46 million. But it's a slower CAGR compared to the rest of the region at 2.7%.
Okay, so the Asia-Pacific story is really about that high overall growth, powered by China's sheer size and India's incredibly fast expansion rate, driven by those domestic factors.
Exactly. Those two are the main engines pushing that region forward so strongly.
Right. Let's move over to Latin America. What's the report tell us about that market?
Latin America is, well, it's a smaller market overall compared to North America, Europe, or Asia Pacific, but it is growing. Brazil is the biggest player there.
Yeah.
It's growing from $55.1 million in 21 to $106.2 million by 2033. The report links this to just general rising tourism interest in Brazil.
Any other countries or trends standing out in Latin America, according to the source?
Yeah, Argentina is projected to reach $39 million by 33, up from $21 million. Chile moves from about $14.5 million to $29.5 million. Consistent growth. But the real standout in terms of rate is Colombia.
Colombia. What's its CAGR?
Highest in the region at 7.4%. It's projected to grow from just under $9 million in 21 to nearly $21 million by 2033.
Wow, 7.4%. So even though the base is smaller, that's really dynamic growth.
It is. Peru also shows decent progress, $6 million to nearly $14 million.
So Latin America, smaller numbers generally, but some real bright spots like Colombia showing significant potential, maybe pointing to new investments or interests.
Yeah, exactly. Shows potential in specific markets within the region, definitely.
Okay, last region, the Middle East and Africa. What's the dynamic there?
According to the report, growth there is really tied into two main things. the recovery of tourism post-pandemic, and maybe more significantly, these really large-scale leisure development projects happening across the area.
Oh, those big investments we hear about.
Precisely. So Egypt is projected to grow from $6.5 million to $12.8 million by 2033. Turkey from $14.8 million to $30.5 million. And then there's the rest of Middle East segment.
Including places like UAE, Saudi Arabia.
Exactly. And that's expanding, too, from $6.4 million to $12.8 million, clearly benefiting from those major leisure investments.
So the broader push for tourism and big leisure projects in MEA is directly lifting the marine park sector along with it.
That seems to be the conclusion from the source, yes.
Okay, wow. We've covered a lot of ground, the global scene, deep dives into each region, the specific numbers, the reasons why. Let's try and boil this down. What are the absolute key takeaways someone should get from this source report?
Well, first and foremost, it's clear this market isn't just ticking along. The report describes it as experiencing robust expansion globally. It's definitely growing.
Right. And the main forces pushing that growth, just a recap from the source.
It's that mix. Rising demand for tourism overall, continued investment in themed entertainment, and that growing environmental awareness piece influencing choices in park design.
And which specific areas did the report really highlight as the ones to watch for high growth going forward?
China and India were major ones, obviously, given the Asia-Pacific numbers. But also Mexico and Colombia stood out for their high CGRs.
Okay, the high growth hotspots. And in terms of who's biggest right now, the established leaders.
The report confirms the U.S., the U.K., and Germany currently have the largest market sizes.
And looking ahead, what trends does the source suggest will keep the momentum going?
It points to the increasing importance of marine education and conservation as part of the experience. People want more than just a show, maybe.
Yeah, that value element again.
Exactly. And that, combined with the strong trend of family-focused recreation, seems set to ensure demand keeps up in both the mature markets.
This audio was created with podcastle.ai.
Seems set to ensure demand keeps up in both the mature markets and the emerging ones.
This report really does give a clear map, doesn't it? Where the marine park market is, where it seems to be heading, the regional differences, and the why behind it all. It's more than just numbers when you dig in like this.
Absolutely. You see how those bigger global trends connect down to this specific sector?
So here's something to maybe chew on, pulling directly from what we've discussed from the source. Think about that blend the report kept mentioning: leisure, education, conservation. What might this specific trend within marine parks suggest about what people, you are increasingly looking for from travel and leisure overall these days? Is it telling us something bigger about changing expectations?
That's a good question. Is leisure just about fun anymore, or is there an expectation for something more, like learning or contributing, even indirectly?
Exactly. Are visitor demands shifting more broadly? Anyway, hopefully, diving into the details of this report like we did gives you a much richer understanding of the forces shaping this specific slice of the global tourism world.
All right, let's dive in. We're looking today at marine parks, ocean parks. That whole world.
Yeah, it's a fascinating area. Things are definitely changing.
We've got this article giving a snapshot, the market dynamics.
And our goal really is to pull out the key insights. What's driving things? What are the hurdles? How are these places transforming?
Okay, so first up, growth.
Yeah.
What's fueling it? The article points to the big tourism rebound globally.
Definitely. And also this demand for really immersive experiences. People want to get closer.
Especially families, it seems, across Asia-Pacific, Europe, coastal Americas.
And think about those iconic things, the dolphin shows, huge aquariums, those walk-through tunnels.
Right, like in Florida or Dubai, Okinawa, too. They have that wow factor.
But it's becoming more than just tourist entertainment, isn't it?
Yeah, the source highlights this shift towards education and conservation.
Exactly. Governments, NGOs, they're seeing these parks as partners. For school trips, environmental awareness.
Like the Singapore example, working directly with schools. That's quite a shift.
It is. And it's backed by serious money.
Yeah, the investment piece.
Yeah.
Huge government and private funding going in.
They're not just standalone parks anymore. They're part of waterfront developments, even smart cities.
China, the UAE, the U.S., building these massive tech-heavy centers.
But scaling up isn't easy. There are some big challenges.
Okay, like what?
Well, first off, the sheer cost. Building them, running them.
The animal care, the water filtration, safety. It must be astronomical.
It really is. Very complex, very expensive. So you need deep pockets. Only really robust organizations can manage it.
Right. And then there's the other big challenge, the ethical side.
That's a growing pressure. Groups like PETA, animal rights organizations.
Questioning keeping animals in captivity at all, especially for performances.
Exactly. And that affects public opinion. It pushes regulators. We see that in parts of Europe, California.
It's a major factor they have to deal with, impacting their image and how they operate.
And it links to resilience, too, because there's this strong seasonality issue the source mentions.
Ah, right. Busy in summer, school holidays.
But then you get these sharp drops in the off-season. Or weather risks. Think about hurricane zones like the Gulf Coast.
Yeah, that adds another layer of financial risk. Okay, so challenges aside, what's changing the actual visitor experience? What are the trends?
Well, digital is huge. Parks are pouring money into AR, VR simulations.
Like experiencing the deep sea without getting wet.
Kind of. Interactive touch pools, too. Digital zones, appealing to audiences who expect tech.
Makes sense. People want more interaction, less just looking through glass.
And alongside tech, there's a big push for eco-consciousness, sustainability.
How so?
We're seeing new parks, like in Australia or the Nordics, built with eco-certified materials using recycled seawater, solar power.
So weaving sustainability right into their brand. It's not just an add-on.
Exactly. It's part of the story they tell visitors.
And speaking of the whole package, the article mentions edutainment resorts.
Ah, yes. Combining the marine park with themed hotels, maybe water parks, creating a whole destination.
Right, trying to get you to stay longer, spend more. Like Sentosa Island in Singapore.
Yeah.
Or Palm Jumeirah in Dubai.
Those are prime examples, building a whole ecosystem around the marine park.
So putting it all together, it's a really dynamic picture, isn't it?
Yeah, absolutely. You've got innovation and new experiences pushing forward.
But bumping up against these significant financial and ethical challenges.
And all while trying to meet changing visitor values. It's a complex mix.
It's definitely clear from the source material these parks are far from static. They're really evolving fast.
Indeed. So maybe a final thought for you listening. When you consider all this, the entertainment, the education, the ethics, the technology, how do you think the marine park experience you encounter next might fundamentally change?
This audio was created with podcastle.ai.